Did you know that over 40% of people taking out a reverse mortgage don't realize the impact it has until it's too late? Today, we're pulling back the curtain on what people aren't told when getting a reverse mortgage. Hey, I'm Josh, and I help homeowners get clear and concise answers to shed the complexity of reverse mortgages. Reverse mortgages are mortgage loans that allows you to tap into your equity without any monthly mortgage payment. They're typically used for homeowners 62 and older, and most people only hear the benefits, not the drawbacks. A few things that I've heard and what a lot of seniors are told when getting a reverse mortgage is: one, it's free money. Number two, you'll never have to worry about payments again. Number three, you can stay in the home forever. But here's the ugly truth. Yes, reverse mortgages offer flexibility and relief, but no, they're not without cost or consequence. Let's clear up some of the misconceptions when it comes to a reverse mortgage. Number one, and one of the most uncommunicated things about a reverse mortgage is, yes, you can actually lose your house. If a homeowner fails to make their property taxes or their HOA payments, their loan will technically go in default and their property can be taken away from them. When you go through the reverse mortgage process, you have to sign documentation that says that you will be responsible for making the property tax, the homeowner's insurance, and the HOA payments associated to the property. And if you don't make these payments, your property can be taken away. Number two, it's not free money. A reverse mortgage allows you to tap into the equity and receive draw payments or lump sums, but you are withdrawing that money from your equity with an interest rate attached. Your loan balance will continue to grow on the back end year over year. So it's not free money, and you're having to pay for it on the back end, even though you don't have a monthly mortgage payment. Number three, your heirs can be left with tough decisions with the property. If you open up a reverse mortgage and then you pass away, your heirs are then responsible for determining what they want to do with the property. The downside of a reverse mortgage is it's eating into that equity that's building over time. And so if your heirs are expecting a lot of equity at the end, then a reverse mortgage may not be the right option. They're also going to be faced with the decision of whether or not they want to keep the property. And if they do, they have to refinance that property out of a reverse mortgage and into a traditional mortgage, since there's no longer somebody associated to the property that may be 62 and older or living in that property itself, and the reverse mortgage has to be paid off. They also have the option of selling the property if they don't want to retain the property itself. What you need to know before getting a reverse mortgage. In order to be eligible for a reverse mortgage, you have to be 62 and older, it has to be your primary residence, and you have to have significant equity in the property. There are fees and costs associated to opening up a reverse mortgage, so you will have to plan on accruing private mortgage insurance fees, loan fees, appraisal fees, and more. Fortunately, these fees are rolled into the mortgage, and so it's not something you have to pay out of pocket, but you do need to plan on that eating into your equity right off the bat when you open up a reverse mortgage. And lastly, there is an inheritance impact. If your heirs have expectations for this property, make sure to communicate that with them at the very beginning to ensure that a reverse mortgage is the right option for you. In conclusion, reverse mortgages aren't good, but they aren't bad either. They are just another tool in a toolbox to be utilized. However, tools can hurt if you don't know how to utilize them. If you or a loved one is considering a reverse mortgage, take the time to educate yourself and speak to an expert like myself to understand if a reverse mortgage is the right option for you. If you have questions about this video, drop a comment down below. If you enjoyed this content and it helped you make a decision on whether or not to open up a reverse mortgage, please like and subscribe. Thank you so much for watching. I'll catch you on the next one.